let's take a look at the QQQs. We got monster cock gap again. I wouldn't say monster cock gap, but we got gap up in the market. Once again, the market was a beautiful trender yesterday, but it was a grinder. I hate grinding markets. Grinding markets can be really tricky sometimes, but we just got to be like really mindful when we're trading them. Yesterday, like we had this TQQ at the like midday, and it went up all day, but it was just so slow. Like that's what makes grinding markets like really, really tricky. If we're thinking about if we're thinking about where the market could go today, like you can see we're sitting like right on, we tested down into the 50 SMA. Now we're sitting on some big support here, and we're actually kind of rounding out. So even though like technically like in our heads we think like, okay, we're due for a big pullback in the market or we need a pullback, that's just the price action is not showing us that. The price action is saying this market is long and strong and it's time to get the friction on. We gap down, but the market's already going red to green. So I think the play for today, as long as it hangs out, above yesterday's high, I think that's going to be really bullish. That kind of takes us out into a scenario where, this tightness of range that we have here, this consolidation that's building, essentially it just is a coil for, another push. It's just a coil for another push of something to, get it going. Oh, man, I was really hoping to go red to green on this market, but the Lord doesn't like to give us what we want so easily. So that's where we got to go. Guys, you can see here, TC2000 has started to, institute some pre-market scans and stuff. All sorts of little pre-market scans. You can actually do top losers, top gainers, but like right from different time frames even. So you can actually choose for like what's happening in the last hour, what's happened the last day. So you can already see here like, you can put in like all these kind of parameters, and now you'll have like all sorts of shit. So you can have like a liquid gainers pre-market, a top losers pre-market, and what you'll start to see is it looks a lot cleaner than all the other pre-market scanners out there. So we'll have to make a pre-market one, but what you can do with the new update on TC2000 is like you can set some pre-market conditions essentially. You can set some pre-market conditions, and then you'll see like all the stuff that's moving around on different time frames. It's actually pretty cool, but you could really just go and do your top losers liquid gainer scan that we run in the chat room every day, and you'll see all this stuff. But you just have to change around the parameters so that like you may do like say mixed time frames, and once you add it in the mixed time frames, like then you could. Like this would be different. Like, we would want to, for mixed time frame, we'd want to see like, for the volume, we'd want to see 50,000 pre-market volume. So what you'd want to do is just add in a condition for, a different type of volume. So that's all. Yeah, Ramos, of course. Of course, buddy. So kind of cool. We'll play around with these things over the course of the next couple days, but looks actually kind of interesting. So let's talk about just some of the kind of movers this morning. Now, IMMU is popping on some news this morning. You can see here, like, this thing is still cooking. IMMU secures federal FDA approval, blah, 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 for breast cancer awareness. Sounds like something pretty cool. You're breaking out over, if you think about this, like, anytime you have a news play, you want it to bust out into highs or above, like, some level of supply. Stocks are moved around by supply demand. Supply demand is the key to everything in trading. When you can have like a piece of news and it takes you out over, that supply zone, that's really bullish. So as long as this hangs out over 27, I think we keep it on watch. I will give you just a caveat of this, which is, man, IMMU is like it's not like some sick trader. You know, it doesn't just like run around and shred like, it's not like a monster shredder. So that's just something to kind of keep mind of. SNBR has actually got a really nice range break that's setting up here. You got a nice push pre-market. You know, looks like logs higher, EPS net sales. Well, I don't know how. All right. So they actually beat earnings, which is rare. You got a 20 million share float on this. It's a $600 million company, so it's not, you know, it might wick around a little bit, but you've got a range breakout over there. They beat earnings today. The float is low enough where, you know, you may get a little action on this. And, you know, frankly, this thing was just $60, you know, a couple months ago. Why not, right? Why not? So I think that this one's looking, I would roll with this. It looks pretty good. Oh, yes. Add that in. Cool. UCO. So oil is popping hard today. If you look at the futures ETF, which is QM, that's like the half, you know, the half futures contract for oil, up 19%. When it's 19%, what can happen is like oil stocks will trail. So if you think about like, you know, the oil ETFs, they suck to trade. But if you look at, like, if you're even seeing all these like kind of little oil stocks, see like OAS, these are like a couple of them, you know, you might be able to throw a couple thousand shares and maybe you get a run on some of these things. OAS, what was the other one? WLL is another one. Like, you know, these things have been like just beaten down. So you may get like a quick run in some of these names. SM is another one that we used to trade. You got a nice range break over here. Now, I personally don't like any of the dollar names, so I'll stick with, you know, FANG. FANG is, you know, kind of popping up nicely this morning. And then what do we have here? Oxy trades really well. So I would keep these Oxy and FANG on your watch list. If, you know, oil holds up, you may see like an opening dip on these oil names and then they go. If you like the cheaper names, you can always go in with SM, WLL, OAS, you know, stuff like that. They'll be just fine. Does that make sense? Cool. So, I you know, the commissions get crazy when you start trading those penny ones. Yeah, stay away from them. I gotta stay away from them. The commission get too crazy. I know a lot of you guys aren't paying commissions right now, but if you notice, ever since you stopped paying commissions on your trades, what's happening to your platform? Bust every day. Freeze every day. Open orders stuck. Trades stuck. Entries too late. You hit market order, it sits there, and you're just holding your dick while this fucking stock breaks out. That's what happens with free. Everybody wants free. Everybody wants a free chat room. Everybody wants a free class. Everybody wants a free video. Everybody wants a free education. Everybody wants free trades. Everybody wants free sex. But there's no such thing as free. You get what you pay for. So now that you see all the free brokers doing it, so I willingly pay my $500, $600 a day commissions because I never have any platform issue, never get any trades stuck, and I get good entries. You know that. You know that. You just always got to be mindful of that. The commissions are crazy, but what can you do? I like this Win. Win has got a big range break here. This is probably my favorite out of a little bit larger price names. Win, MGM, they're really coiled up here. When you get really narrow range candles, like that, essentially what's happening is the range is compressing so that you can like get a pop. So I like MGM, I like Win. I think both of these have a chance. Now the issue with Win is it's gapping up like $5 right now. All right, you can't chase Win. You know, you can't chase any casino stock. So what you got to do at the open, all right? You got to let it pull back. There's two things you can do at the open. Number one, you let it pull back to the 9 or 20 EMA. Let it start to hold there. Start to build. If it does, then you can catch like a decent little shredder on it. But you don't want to just chase this thing up. Now, if it gaps up and it ORBs, right, meaning minimum 3 sideways candles, tight range, and then a go, you can roll with that too. Those are the two options. You either pull back to the 9 or 20, you start to hold, or you ORB. If you don't do either one of those, then you've got to leave the trade alone. That's the nature of trading. You get 3 options in the morning on a stock. You go red to green, you gap up, you go ORB, you gap up and you pull back, you go quick pullback setup. Those are the 3. If you don't have any of those setups, you just leave it alone, right? You leave it alone and you move on. Does that make sense? Good. Like there's a lot of these kind of like energy little ETFs like starting to pop up and stuff. Man, these things are dick to trade though. You ever try to trade energy ETF? It's like burn, and you know what it does? It brings out the worst in you. You know, because you buy everything too high, then you sell low, then it pops, and you end up in a spin cycle. All energy ETFs put people in spin cycles because they move haphazardly. They have news midday. Okay, we've got oil reports, we got inventories. You know, we've got plug this, plug that, whatever it is, right? So these things are shifting around and they just don't move that clean and the rug just pulls because the liquidity stinks. So I'll probably stay away from these energy ETFs. But I watch the ETFs. If the ETFs go, we go with FANG. We go with Oxy. They're both very liquid and they move pretty clean. Yeah, all these casinos are going. Guys, if you got some new scans that are building into TC2000, yes, so frankly, it looks a lot better than the Trade Ideas one. So I would use this one for the pre-market. Yeah, and you can shift them both to the up and down. See that? But the big thing is like you want to see what the trends are in the 90-day, 30-day, 5-day, year-to-day time frame so you can see what's going on. Hey, Satinder, ORB means opening range breakout. If you check on the channel, like I always make videos for it, but essentially it's when you get a gap up, you got minimum 3 sideways candles, and then a go. All right, a minimum 3 sideways candles and a go. So like it would be something like. Yeah, like you're taking out like some kind of opening range. So it's like, you push up at the open, you build out an opening range. Actually, frankly, if it coincides with the previous day's range, it works a lot better. And then when you take it out, that starts the opening range. This is a trade we took like the other day. Similar, right? Like see this is an opening range breakout. So like this CGC, like it opened up. I took this trade a couple days ago. It opened up. And then, like, you see, like, at the open, so, like, that's, like, your first hour, you start to build out a range, right? You still have to build out a range. So when you take out that range, it's just a very quick and easy play. Add 15.50. I mean, you're going to risk about 15 cents on the trade. So very small, right? You want to put your stop in the 9 EMA or the VWAP, and then, right, just shred. Now, the key is for opening range breakout, you don't marry them. It is just a quick shred because it's what's opening range breakout mean? Like, what does it stand for? Open. So you're really only holding it for the open. Trading is about quick trades, never marrying them. Quick trades, never marrying them. You get a setup, you shred, you move on. You get a setup, you shred, you move on. What happens though is, you don't want to marry these things. Once you start holding them too long and they start to come back, you get stubborn. You start digging your heels in, and that's when the overtrading starts. That's when the overtrading, the drinking, the drugs, the hookers, that's when it all starts. It all starts from one innocent thing where you held too long, you went for the home run. Next thing you know, you're in the bathroom of some weird nightclub where men are wearing spandex tights and latex everywhere, and you're getting ball gaggled, doing cocaine in the bathroom, all because you held too long. You don't want to do any of that. You want to just ORB, shred, take your profits. ORB, shred, take your profits. Don't be a statistic. Don't be a victim. Does that make sense? I'm sorry, man. All right. I'm sorry. I don't know what's wrong with me. Yo, Crocs has got earnings today. See this bad boy? So you got earnings coming down here. Results decline year over year. Warns of further revenue decline. This is actually something worth putting. As long as it stays under this trend line here. As long as that stock stays under that trend line here, I think we're gonna be good to go. Hey, Alex Podell, by the way, dude, I got like 2 new students in London. I gotta hook you up with them. Wait, are you in London or Manchester? Yeah, add Crocs. Add Crocs to the watch list. This one looks pretty nice. Now, the issue with Crocs is that it's a retail stock. Retail stocks notoriously stink to trade. Like, let me try to trade fucking Lululemon. Terrible, right? So, Crocs, I would give this a B. I'm going to add it to the list for a watch, but I'm not like that keen on it because it's a retail stock. I do think, just as an American, you know, just as an American, you gotta short Crocs as an American, right? You see a man wear Crocs. If you care about humanity, you care about your neighbor, like, you gotta say something. Like, bro, you're wearing plastic shoes. You're advertising to the world your feet smell. Like, it's just unbecoming, right? It's not what a gentleman would do. You know, just for that alone, as Americans, we've got to short this thing. But retail stocks do suck to trade. Target's getting busted on earnings too. Target's a 500 million share float though. The gap down is probably too... It might have used up a lot of its range. You know, like, so when you have like a stock that's got like bad earnings and it gaps down like $5-10, what you need to see is, does this stock actually have the ability to go more? Like, does it have a history of making more? I think that maybe Target, this one's probably used up its range, and it's a thick little noodle. Target is like Algo City. Anybody ever trade Target? Algo City in it, because it's so thick, it's got so much float on it, you know, you really go in Algo City. Now, Pay-C, this could actually move okay. You know, Pay-C, you get busted down on some earnings, but it looks like, this might even just be analyst downgrades. Pass. APRN, junk. All right, cool. So this is, I'm going to just give you a very quick game plan today, all right? If this market goes, we'll play this TQQ to the long side as a play on the market. The easy play on the market is also shorting this TVIX. Every day, like, so if the market's gapping up today, so when you short TVIX, you're betting on the market to go up. TVIX does this kind of move all the time, where it'll gap down, it'll pop into the EMAs, and dude, it'll just, if the market goes, it will literally just trend down like 10, 15, 20 points throughout the day. Like, this is like a daily trader. It's just like a nice steady trade. A couple hundred shares, you can rip like some nice 10, 15, 20 points. So you can see this thing's gapping down again. I like this setup a lot. It's called a quick pullback setup. A quick pullback setup is you get a gap down on a trade, you let it pop into the 9 EMA, and then you watch it fizzle out, right? So as that 9 EMA is coming down, it'll fizzle out and kind of bust its way back under the VWAP, and then you start to get this thing going, all right? That's a 9 EMA pullback trade. You can do that to the upside and downside. So the upside trade, like when a stock gaps up too big, or the market gaps up too big, I use this setup every day for a decade. You let it push, pull back to the 9 EMA. Once you get a couple green candles a hold, you got the confirmation, and then you can take this thing, you know, back to the long side. So it's a very, very simple day trading setup, something I use, you know, all the time to the long side and short side. So same type of deal. You got a gap down in TVIX, right? What we need to see is, right, if it starts to pull back into the 9, let's see how it acts. I mean, the market's holding up pretty well, Jordan. I don't know if we got any carnage per se. I guess carnage for shorts. Carnage for sure. So that's the watch list for today. Keep these earnings names. We got Win, MGM. ZM is looking zesty right now. There's no gap on ZM. This one's looking good. ZM likes to go right out of the gate sometimes. Now the question is, you can't just buy it first tick. You buy first tick, you always will lose. You buy first tick, you lose. You gotta wait. ORB requires 3 candles. Quick pullback buy, which is that pullback to the 9 EMA. That usually takes 15-20 minutes. ZM is notorious for like spiking the first candle and fading back. So you got to really let that thing set up, right? Let it marinate. Get on that marination station. Then you're good to go. Oh, yeah. Yeah, TDOC is okay, but this is more of a grinder right now. It'd be nice if it pulled back for a couple days. Hey, Mr. Hubs, OAS, WLL, these are like, these are probably, I don't know if they're any good. They're going to zero at some point, but for the next day or two, you may catch a run in them. For the next day or two, you may catch a run in them. The problem, penny stocks are very, very tricky, man. You get in the wrong penny stock, next thing you know, you lose all your monies. You only get in, most people get into the penny stock because they got no monies. And then they lose the money. So it's like a double trouble, right? It's worth a trade probably at some point. But don't chase it up and don't marry it. These things are, cheap for a reason. Because they stink, right? So guys, trade well today. Shop is a daily trader at this point. I actually think it might have some upside. Shop is a daily trader too. CGC's looking, this thing's looking tighter than a goose's caboose right here. Good. All right, let's do this. Hey, Alex, everybody's due for a couple, right? All right, man. Let's go have some fun, guys. Yesterday, morning was nice. Midday was choppy. Let's see if we can catch something, but focus in the mornings. What we're doing is, like, as the volatility in the market decreases, we're moving into more summertime trading where, frankly, it's frankly just, yeah, like we're moving into that summertime trading where you're just getting, like, summertime trading is you get like 2 hours of action and you make some money, but you want more action because we're junkies, and then the rest of the day there's none, and you just end up grinding out commissions and stress the rest of the day. Yeah, that's summertime trading. You're starting to see aspects of it right now where like the morning is so hot and then the rest of the day is just like, so we got to be a little bit careful on that. But I think we've got enough gappers and there's enough earnings plays. Guys, check out those TC2000 scans I sent you guys. They're going to be, I think they're going to work pretty good. Because it looks like what you can do is you can change this, you can change scans on different time frames. So you can run like a scan on the daily, but then like you can like reiterate to it like, okay, I want something that's breaking out in the last 15 minutes, like up 5% of the daily and up 1% the last 15 minutes. So like it's called flex scanning. That's new. I haven't seen that in any other scanning platform. So I'll play around with them. I gave you the basis of what they look like. Hopefully that looks, yeah, Nugget, J-Nugs had a reverse split. So they're not up 50 points. It's a reverse split. Yeah, the first month on TC2000 is for $5. So just use this. You can use this. I'll send you all my scans. Message me on it, and I'll send you all my scans. Anthony, message me Kunal00. I'll send them to you today. All right, let's have some fun.